The Gold Rush of 1848 year. In 1848, gold was discovered in California. The discovery sparked a massive migration as hundreds of thousands of people rushed west in search of fortune. Thousands from all over the country set out for California. It was the era of the 49ers, ready to fight for their chance at success. Miners tirelessly searched for gold, pushing through mud, danger, and hard labor. Only a few struck it rich, but everyone played a part in building America's growing economy. The Industrial Revolution and the rise of corporations. In the second half of the 19th century, the United States experienced an industrial surge. Huge steel mills and thousands of workers laid the foundation for a new industrial America. Railroads connected the continent. Steel, oil, and goods could now move faster than ever before. On Wall Street, the first economic giants emerged: oil, steel, and railroad corporations. It was the era of Rockefeller, Carnegie, and the birth of American capitalism. The stock market crash of 1929. In early 1929, the market seemed unstoppable. Confidence was everywhere, and investors flooded Wall Street, buying stocks without hesitation. But in late October, panic erupted. Prices collapsed, brokers tried to sell at any cost, and billions of dollars evaporated in mere hours. When the market fell, a wave of bankruptcies swept across the nation. Millions lost their jobs and lined up for free bread. The crash of 1929 marked the beginning of the most devastating economic era in American history: the Great Depression and the New Deal. By the early 1930s, America was plunged into deep economic darkness. Stores closed, factories shut down, and millions were unable to find work. In 1933, President Franklin Roosevelt took control of the crisis. His famous fireside chats on radio brought hope to the nation. The New Deal created jobs for millions. Roads, bridges, and dams were built. These projects gave Americans a chance to rebuild their lives and laid the groundwork for future economic recovery. The post-World War II economic boom. After World War II ended, millions of soldiers returned home. The country was exhausted by war and ready for a new beginning. The U.S. economy began to grow rapidly. Thanks to the GI Bill, veterans received affordable mortgages, sparking a massive suburban housing boom. Industry roared at full capacity. Cars, appliances, electronics. Economic growth seemed limitless. It was in the 1950s that American consumer society truly took shape. The 1973 oil crisis. In October 1973, OPEC announced an oil embargo against the United States. Fuel supplies collapsed overnight, shocking the American economy. Across the country, huge lines formed at gas stations. No gas signs became a common sight. The economy slowed. Rising fuel prices drove inflation, reduced production, and led to recession. The government searched for solutions, introducing restrictions and developing new energy programs. Deregulation and the Wall Street boom. In the early 1980s, the Reagan administration launched major financial deregulation. Restrictions on banks and investment firms were loosened, opening the door to rapid market expansion. Wall Street entered a true financial boom. Stocks soared, traders celebrated, and the market seemed endlessly profitable. But unchecked growth came with risks. In October 1987, the market crashed, the event known as Black Monday, revealing both the opportunities and dangers created by deregulation. The dot-com bubble. In the late 1990s, internet startups appeared everywhere. Companies were valued at billions of dollars, even without profits or products. On Wall Street, dot-com stocks surged. It seemed the internet boom would never end. But in 2000, the bubble burst. Thousands of startups went bankrupt, and billions vanished. The crash delivered a painful lesson to investors and shaped the foundations of the modern tech industry. The financial crisis of 2008. In the mid-2000s, the U.S. housing market rose endlessly. Banks issued mortgages with minimal checks, building a massive bubble. In September 2008, the major investment bank Lehman Brothers collapsed. The moment became a symbol of total financial breakdown and the start of a global crisis. The crisis hit millions of Americans. People lost homes, jobs, and savings. The 2008 crash became the most severe economic disaster since the Great Depression. Post-COVID recovery and the digital economy. In 2020, the COVID-19 pandemic froze daily life and the economy. Cities emptied, stores closed, and millions shifted to remote work or lost their jobs. But the crisis accelerated the shift to the digital economy. Remote work, online shopping, and fintech services expanded rapidly. By 2022, the U.S. economy began to recover. Hybrid work, online services, and investments in technology shaped a new model of growth. The pandemic reshaped business and financial life for years to come.